Everybody, welcome to our first Notional Community Livestream AMA. My name is Kyle Long, and I'm the head of marketing here at Notional Finance. I'm really happy today to have with me the two co-founders of Notional. We have Jeff Wu, who is the CTO, and we have Teddy Woodward, who is our CEO. So today we'll be answering first some questions that we've already collected that have been sent in from around our social media accounts and Discord groups. And we'll be talking also about a few recent news items that have come up in the last couple of weeks about Notional. And just want to invite everybody to, if you're watching this, submit any questions that you have live as we're going along. And if you're watching this later on YouTube, please feel free to get in touch with us. You can join our Discord groups or follow us on Twitter, and we're always happy to answer user questions. So let's get started. And since this is the first one of these sort of community sessions we've done, I just wanted to start off asking you guys a little bit about your background and what you're all about. So yeah, Teddy, you want to go first? Tell us a little bit about yourself.
Yeah, sure thing, Kyle. My background, I'm kind of the finance guy of the team here. I started my career as an interest rate swap trader at Barclays Investment Bank. I worked there for about 4 years in London. Then I traded crypto for a while. After that, about a year and a half. And then I moved to San Francisco to start a DeFi project. And I met Jeff at the DeFi Hackathon in November 2019. And we got along really well. And we started Notional pretty much right away. So that's me.
All right, Jeff?
Yeah, so my background is in tech. So I moved up to the San Francisco Bay Area in 2011 to work at a company called Atlassian, which is sort of kind of like a big player in the like collaboration, workplace collaboration space. So I was a relatively early employee there. I left there in about 2017 and sort of pursued a number of things. And one of them was to really get into crypto. So started learning more about Ethereum. And when I found out about MakerDAO, I was sort of like kind of hooked on this idea of decentralized finance. It just sort of made a lot of sense to me as like a good fit for what Ethereum was. But kind of like still like not really feeling like I was in the industry in late 2018, 2019, I took a job at Splunk, which is another sort of San Francisco-based tech company that focuses on data analytics and like data engineering. And there I was the product manager for blockchain. So I got to really kind of see how the blockchain space was evolving, both on the public chain side and on like the private chain side, like consortium chains and things like that. And sort of through that experience, I really felt like, yeah, the really exciting stuff was definitely happening on public chains like Ethereum and Bitcoin. And so, Teddy and I met at a hackathon. It was the SF like Blockchain Week hackathon. That was like, I think in late 2019. And we both were oddly enough, like very interested in fixed rate lending and borrowing because, we had seen Compound come out kind of very like recently, like that summer maybe. And we thought it was a really cool idea, but we also felt like, we both knew that like fixed rates were sort of this bigger market opportunity, something that's a lot more common in traditional finance. And so we wanted to kind of tackle building that. And we won first prize at that hackathon with like, I think not a very complete product, but I think like it gave us enough confidence that enough other people were interested in this idea of like fixed rate lending and borrowing to kind of like really pursue it. So it's been a really fun journey since then. I'd say Teddy and I like work really well together. Teddy does like a lot of the economics and like business side of what we do, and like I'll do like a lot of the tech stuff and coding and things like that. Yeah, I think that's it for me.
Great. So I think probably the biggest piece of news that we've got a lot of questions about lately is the launch of V2. Now it's been announced, but it's not live yet. So do you want to talk a little bit about, I guess, what the main differences are with V1 versus V2 and how that's going to affect the user's experience and everything that's going to be possible?
Yeah, sure. So what I would say is that, like, there's a lot that's different under the hood, but for the end user, there's kind of two main differences. So the first thing is that we are going to enable longer dated maturities. So at launch, we're going to launch with a 3-month, a 6-month, and a 1-year maturity. And as right now we only have 3-month and 6-month, we're going to launch with a 1-year. And the system is designed such that we will be able to launch like really long data maturities. So we'll be able to go 1 year, 2 year, 5 year, 10 year, 20 year. So all the way out to 20 year, which is extremely exciting. And I think it's going to be a little while before we actually get there, but we have the capability to do it when the time is right. So that's really cool. The other, I would say, kind of really important difference between V2 and V1 is that we have totally revamped and significantly improved the experience for liquidity providers on Notional. So we have integrated with Compound, which is going to significantly increase the returns to liquidity providers because they'll no longer be providing DAI as liquidity. They'll be providing like CDAI. So they're going to be earning the returns that come to them on Notional plus the returns from lending their capital on Compound, both at the same time. So that's number one. And then also we've introduced this concept called nTokens, which provides liquidity providers an auto rolling and totally passive way of providing liquidity on Notional. So this is different from V1, where on V1, liquidity providers have to select an individual maturity, an individual liquidity pool that they want to provide liquidity to. So first they have to figure out which maturity they want to provide liquidity to, and it's not totally clear which one they should. And then once the pool matures, they have to roll from one maturity to the next. And there's actually kind of a lot of engagement that's required from liquidity providers in Notional V1. In Notional V2, we essentially automate all of that process, which makes it a lot better for liquidity providers. It makes the system a lot safer. And what it'll mean is that there's going to be, so higher returns, better experience for liquidity providers means there's going to be more liquidity in Notional V2, which means that end users, the actual lenders and borrowers, are going to get better prices.
Excellent. Okay. I think that's super clear. Maybe we should talk a little bit about, we often get asked like the differences between Notional and other lending and borrowing protocols that are out there. So obviously the main difference is that we are fixed rate as opposed to variable rate, like what most people are currently aware of. But do you want to talk a little bit about how we're different maybe from some of the other fixed rate protocols that some people might have heard of? For example, Element or Yield, I know are some of the names that people often ask us, what's the difference between us and them?
Yeah, for sure. So I think that, what we've seen lately is that there have been kind of more and more fixed rate protocols sort of spring up, right? Because people have kind of gotten to the point where they think this is going to be a big thing, and so they're trying to do it, right? So I guess the first thing I would say is that most of these fixed rate protocols are kind of they're like a similar category where what they do is they take yield bearing assets like C tokens or A tokens, and they stick them in a vault, and they give some of the people that put capital in there, they give some of the people a fixed rate and the rest of the people like a variable rate. And so this approach is like what Element does, or kind of like what Barnbridge does. And I think it's similar to what, something like a Pendle does as well. And the thing with this is it only works for lenders, right? So you can't borrow at a fixed rate on these protocols. You can only lend, right? Now, I understand why they're doing it this way, but a key advantage to Notional is that we cater to both borrowers and lenders, right? And that, for one thing, that means that we can address, people that want to borrow, which they explicitly can't. But it's also important for lenders because basically borrowers are willing to pay higher rates to lock in their interest rate for a long period of time and avoid interest rate volatility. And the fact that we can cater to borrowers and allow them to borrow on Notional means that the lenders on Notional get access to higher interest rates that the borrowers are willing to pay. So that's like a key differentiation there for Notional. Now, the other thing, so the other kind of fixed rate protocol is something like a yield, which is kind of closer to our construction in that they allow both borrowing and lending. Right now, the difference between us and yield, I would say, there's probably two differences here that are pretty key. And the first one is that, we have a better LP experience. So kind of the stuff that I was talking about earlier, we are integrated with Compound. We have these nTokens, so LPs get a totally passive experience. And what that's going to mean, again, is that there's going to be more liquidity on Notional, better returns for LPs, and better prices and less slippage for actual lenders and borrowers. So that's the first difference, I would say. And then the other thing is that on Notional, another important thing about nTokens is that we can actually, people who have nTokens on Notional can borrow against them. And this is a really important point because so someone on who wants to borrow against their Ether on Notional, for example, could take their Ether, mint nEther, earn an interest rate on that nETH plus note incentives, and have and then borrow against that nETH, right? So essentially it means that instead of just putting their Ether into Notional and not earning anything on it, and it allows them to optimize the yield that they're earning on their collateral that they're posting against their debt. And that's a really special thing because it allows borrowers to optimize the yield they're getting on their collateral. And that's something, again, that you will not be able to do on yield. So it's going to be a more efficient experience for everyone, for the liquidity provider and for lenders and borrowers as well.
Great. So it sounds like one of the things that sort of the servicing borrowers and lenders does that on Notional is that it does add some complexity to the system. So I think that brings us to our next question about how we're dealing with security coming up with a V2 launch, and why, for example, we went with Code Arena for one of the audits. So I don't know if you want to talk a little bit about security, Jeff, and how Code Audit is part of the strategy that we're doing. Yeah,
great. So security is it's the top priority for us above all else. So the most important thing here is we take very seriously that when you use Notional, our contracts are going to custody your money, and they sort of have to operate according to what we say the contracts will do. So the first step there is really even before we code, it's really between Teddy and I in terms of the overarching design of the system, right? From an economic perspective, we need to really make sure that everything is very capital efficient and you're getting the best bang for your buck, and the system is designed robustly from an economic standpoint. So that's the first thing. The second thing is when we actually write the code, when we actually write Solidity, we write a lot of tests, right? We write thousands of lines of unit tests, before anything is even shipped to auditors, to make sure that, when we hand something to the auditors, it's as high quality as it can be, right? So the auditors can really get into the protocol, and they're not dealing with sort of kind of like boneheaded mistakes and things like that, right? So, it's really important to have clean code and really good test coverage. So that's the second thing. From the audit perspective, I would say like broadly, for those of you who are not sort of like in DeFi and like actually actively working in the space from like the developer perspective. So, security audits right now are like very challenging. So the timeline to like get security audits, it's quite long, and it is expensive, but that's not really our primary concern here. But we've been lucky enough to sort of secure a couple of audits with people we really respect in the space. So one is ABTK. They've done the Uniswap V3 audit, and they're sort of like they've sort of built one of these math libraries that's like really commonly used throughout DeFi, which does natural logs and exponents. So they're really sharp guys. They've been in the DeFi space for a long time. They actually sort of found one of the early sort of vulnerabilities in the ERC20 spec, which some of you might know about. And the second auditor that we're actively working with right now is called Certora. So Certora is a company that focuses on what's called formal verification. So generally, auditors will either kind of like eyeball the code and look at it line by line very carefully, or maybe like write some unit tests to sort of validate that certain conditions hold. Now, what Certora does is a little different. What they'll do is work with us directly to come up with what are called invariants. And these are sort of mathematical proofs of certain behavior. So you can imagine that, for example, if the notional contract is going to say that you've deposited 100 ether into notional, the notional needs to actually increment your balance by 100 ether, and that can never not be true. So we'll say that's an invariant. And so what we do is we work with Certora to define these sort of mathematical invariants that, if all of these things are true, we'll feel very confident that there are no bugs in the system. And what they'll do is actually run very sophisticated software to prove that no input can actually violate any of these rules. So this is a really powerful technique. It's definitely very cutting edge. But it's something that we're actively working with them on, and we'll produce kind of like an audit report from that as well. And the third thing here is like Code Arena. So, part of DeFi is really like being a part of the community, and also knowing that there's a lot of great auditors out there that aren't sort of like affiliated with one of kind of the major auditors, or like have a company and kind of like have a business built around that, but they're really keen sort of evaluators of smart contracts. So, we're really excited to, do Code Arena and, give these people a chance to sort of take a look at the code, give us feedback, and also find bugs and earn some of the bounty there. And I would say lastly, it's really an opportunity for us to talk about the code base, give people a chance to really understand it, especially the developers out there. Because Teddy and I really feel like there's an opportunity to build really interesting products on top of Notional, right? Just like there are some really cool products like Notional built on top of Compound. We think Notional is like another sort of platform that will enable, a new class of kind of DeFi product out there. And so, I think part of Code Arena is sort of bootstrapping a bit of a developer community around Notional, and we're obviously going to continue to invest in that. So, yeah.
Cool. So for anybody who's listening who doesn't know Code Arena, it's sort of a community-led open source bug bounty contest. Part of that, as Teddy mentioned a little bit earlier, it's $150,000 USDC prize pool, plus 50,000 note bounty that's involved in this. So that starts in August. So it runs for 2 weeks from August 26th to September 6th. And we'll be opening up the code publicly before that, so everybody can really dig in and be prepared. But as part of that, since we've mentioned it now twice, the note bounty, this is also another piece of news that we've announced relatively recently is the launch of our governance token note and our liquidity mining program details, along with the retrospective airdrop. So Teddy, do you want to talk a little bit about what that entails as far as the note launch and liquidity mining and how that's going to look?
Yeah, sure thing. So, so the first of all, so the note is the protocol's native governance token, and so the purpose of this is to decentralize governance in the protocol and sort of give ownership to the community and sort of harness the community spirit that is really the thing that has made DeFi like grow so quickly. And so that's like a very important thing that we want to encourage for Notional. And the way we're so most of the way that we are going to effect that distribution of note is via our liquidity mining program. So we have allocated 50% of the total supply of note to liquidity incentives. And it reflects the importance that liquidity providers play in the system here. Now, we've talked a fair bit about liquidity providers already today, but I just want to sort of reiterate the importance here. So the more liquidity that sits in Notional, the better prices lenders and borrowers are going to get, and the more size they'll be able to lend or borrow at one time. So it's liquidity providers are kind of a critical piece here, and yeah. So now the way the liquidity mining program is going to work is it's going to incentivize people to hold nTokens. So I talked a little bit about nTokens earlier, but just to repeat what those are, nTokens are tokens that represent a share of the total liquidity in all the different individual liquidity pools for a given currency. So we'll have NUSDC, NDAI, NEther, NWrapped Bitcoin. And basically the idea is a liquidity provider is going to come and deposit C tokens and mint N tokens in return. So these N tokens are going to represent the liquidity provider's liquidity in Notional. And the way the liquidity mining program is going to work is that there's going to be a certain amount of note tokens apportioned to liquidity providers in each currency. And liquidity providers are going to be able to claim an amount of note that is dependent on how many total notes are going to be put towards that currency, and then what share of the N tokens in that currency does the liquidity provider hold. So it should be like, we think it's a pretty straightforward construction. We're not trying to get too fancy. And it's a way of directly incentivizing people to hold these N tokens, which requires them to provide liquidity to Notional.
Okay, great. I think building on that, of course, the question we've probably got a lot also is a little bit about the airdrop for the initial users of Notional, and any details you want to share about that, about when people can claim tokens or we'll get them.
Yeah, sure. So what I would say is that we announced the airdrop, but the token is obviously not live yet, and it will be deployed alongside Notional V2. So I think Jeff can talk a little bit more detail here, but basically the way we're going to do this, we're going to do a staged deployment where we will put the note token on chain prior to the actual Notional V2 system being live. So people will be able to get their note tokens prior to Notional V2 being live, but then the tokens will be locked until Notional V2 is live. So there will be something like maybe a month lag between when people get their note tokens and when they're able to transfer them. But I don't know if Jeff, you want to add some more detail there.
Yeah, sure. I think maybe just stepping back and talking about like kind of the timeline between now and sort of Notional V2 in total. Currently we're under audit for the smart contracts. So, those are sort of in code freeze, and largely we're just kind of like dotting our I's there. The sort of next step for us will be to launch a testnet UI. So that'll be on one of the Ethereum testnets. There'll be a web UI that users can go to sort of like test out the V2 kind of like interface. The web UI is going to look a lot similar to what you see now on Notional Finance, but obviously with some changes to account for the differences. So that'll be out sometime in August. We're shooting for the next week or so, but we'll see how far we get there. Then following that in September, so we'll do Code Arena. We'll need a bit of time, maybe a couple weeks to sort of go through the results of these audits. We have like a couple other audits concluding in that same time frame, so we'll need to sort of like kind of digest the feedback there, and then sort of along that same time frame, we'll be able to launch the Note token. We'll be able to put it on chain. And there'll be like some sort of website where part of the website where people can go ahead and like claim their tokens that they've been airdropped. In September, we're also looking to open source some like SDK, like JavaScript SDK for off-chain sort of developer tooling, and then also we'll open source some on-chain like Solidity like developer toolkits for people who want to get involved in liquidations. Or maybe like other just sort of examples of like how you might integrate with Notional via Solidity. So some developer stuff will be sort of made public in September. And then currently we have, if we were to launch Notional in September, like the first maturity would like come due at the end of September, I believe like September 29th. So that's not a very great experience for people who are like, want to use it right off the bat and like start to lend and borrow. They really have like this kind of like their first kind of loans will become due in like 2 months or 2 weeks. So we're going to wait till like after that date. So really we're targeting like early October to kind of turn the system on with sort of an initial configuration. And then users, like when they come in for the 3 or 6 month maturities, they'll like get a full 3 or 6 month maturity. So that's sort of like the timeline that we're looking at. Things might move around, but I feel pretty confident that we'll be able to hit all those dates. Yeah.
Okay, great. And I guess while we're in this lead up period to V2, what are some ways that people can get involved? Perhaps from the technical side, Jeff, like with Code Arena, for example. What's the best way to sort of start looking into that process?
Yep. So kind of in the next week, we've created a lot of content for developers and auditors to better understand the code base. So we'll be open sourcing the code base in August as well, prior to Code Arena, and we'll also be releasing. So I've written sort of a blog series, and Teddy and I have recorded a video series as well, sort of going through the code base and like kind of explaining what different sections of the protocol do. So caveat this thing, like the Notional V2 like protocol is like very large. So over 12,000 lines of Solidity. That's extremely large as far as like DeFi protocols go. So I think Compound as an entire system is probably about half that. So these fixed rate loans are like quite like there's a lot involved in doing this, and also like we. All the ways that we give users sort of capital efficiency, sort of like, add sort of breadth to the protocol. So I would say for people who are interested from a technical perspective of getting involved in Notional, as we launch, we'll have sort of the ability to do grants from the foundation for developers who want to maybe add features or build products. So people who are interested in that and getting involved in the developer ecosystem, I think, taking a look at those resources as they come available later this month, and then also just getting involved in Code Arena. Take a look at the code. Even if you feel like you're not an auditor, or you don't know how to do that, I think it's really just looking for bugs, right? And looking for things that don't make sense. And, anything helps from our perspective, right? So if it's that some code comments don't make sense to you, let us know, right? Like, we want to improve the code base so it's something that people like developers can actually digest. And a little bit about Code Arena, just like how it works. So the bounties, the 150K bounty will be paid out regardless, right? So the only difference is like how it's divvied up amongst the people who actually submit issues. And it'll sort of be divvied up based on like the severity of the issue you submit. So I think it's worth, like if you find anything, right, like submit it. And like, I think it's a good chance that you'll at least get a part of that bounty. So, whether you spend a few hours on it or like, the whole like 2 weeks, I think it's a good way just to kind of jump in and interact with the code a little bit. So yeah.
Okay, great. And maybe Teddy, from a more non-technical perspective of how people can get involved prior to launch and just after launch, besides using the protocol. I know part of the initial node allocation is for some community building projects and things like that. Is there anything you want to talk about there?
Yeah, sure. So I guess I can say a little bit about sort of how we see Notional fitting into the broader DeFi ecosystem. So I think that there's really two interesting things here. So first I'll say, nTokens are really interesting assets. They're ERC20. They are high yielding. They're freely redeemable to the underlying. So they're a lot like C tokens or A tokens, but we think that they will be higher yielding than C tokens or A tokens. And I think that they're going to be really interesting collateral in other lending protocols. And they've essentially been designed such that they can integrate really easily throughout the DeFi ecosystem and give people something that is a high yielding and reliable and safe version of USDC or DAI and Ether and perhaps Bitcoin. So I think that, getting nTokens sort of integrated into the broader DeFi ecosystem is something we're really interested in, and something that I think is going to make a lot of sense in a variety of different ways. So we're really interested to hear about ideas that people have there, and kind of the grants program that Kyle, you mentioned. We want to support and encourage people to undertake these integrations, right? So that's one thing. And then the other thing is that, we see fCash as like a real primitive that's going to sort of form the foundation of a new kind of new kinds of financial products. And we sort of see Notional as the base layer sort of infrastructure that supports fCash, that makes sure that fCash is always liquid, that it's always redeemable for its underlying, and just handles all the sort of base layer stuff that makes fCash liquid and secure, right? And so we are really excited about people building financial products that incorporate fCash. And so, just off the top of my head, like an example here would be so right now, fCash assets are zero coupon bonds. So when you lend for a year, you get all your money back plus your interest at a year, like at one year from now, right? Now, if you think about if we're opening up maturities for 5 years and 10 years, do you really want to lend for 5 years and only get all your money back 5 years from now? You might. But you also might prefer, and this is a structure that you commonly see in traditional finance, you might prefer to get fixed coupons on your loan over the course of that loan. So you might want to get, say, quarterly payouts, right, over the next 5 years, and know exactly what your quarterly payouts are going to be. right? And that's something that you can build with fCash, because what you can do is essentially bundle up fCash tokens into like a whole long string of fCash tokens that represent all the payments that you're going to get over the course of this 5-year loan. And so what you can make a fixed coupon bond. And I think that that's really cool. And it's also something where, let's say you've just got your last payment and your next quarterly payment is a month from now, but you really need the cash today because you want to go put it in some exciting yield farm or something, right? Because we have Notional ensuring that fCash is always liquid, you are free to move a payment forward in time if you want, right? You can take your payment early because Notional is there providing liquidity for fCash. So yes, that's one example that I think is really interesting. And we want to see people build on top of Notional, and we have earmarked a significant amount of node tokens to support and encourage people who want to do so.
Okay, excellent. Here's one other question I feel like we've gotten from the community quite a bit recently is, and maybe this is more for you, Jeff, but with all the news about layer 2 solutions evolving and coming on, new ones coming online every day, what's the vision here in the roadmap for Notional and layer 2?
Yeah. Just before, one quick thing before I answer that. So another way I think people can get involved is that, Notional, there's a lot of different sort of governance parameters that go into defining how fCash is structured and how how efficient we can be with the collateral, and just like a number of like things like that are sort of we like sort of rely on empirical results and like sort of data analysis to sort of derive. And so, we, as like Teddy and I and the Notional team, like we're gonna, obviously suggest, what we think, where we think those parameters are. But as we move to like a decentralized protocol, right, like the community should, and like we really do want the community to like become engaged in that kind of like governance process. So I think people who are maybe like more financially savvy or like pretty like analytically driven, I think that's a way, to like really get involved in like the data on Notional and like these different like kind of collateral factors and like settings that we have available to us to kind of tune the system. I think that's a great place to kind of get involved in, and that'll be sort of post-launch, as more data kind of comes out. But I think that's an awesome opportunity for people to get involved. And the second thing, so to talk about layer 2, so our current focus is just like executing the mainnet launch, like as well as we can right now. But really, like as soon as we kind of get over that, the next thing on our radar is layer 2. And we've been in contact with a lot of the different layer 2 providers already, just sort of feeling out like what are the different layer 2s, like how do you bridge assets in, what does the user base look like on those different layer 2s, how much liquidity is there, what are the other projects that are like deployed in those different environments, because obviously we want to make sure we have a good kind of layer 2 experience for users. And we want to make sure that we're in the same layer 2s where like there are other good projects and there's other like kind of good liquidity. So I think that's all just to say, right now we're evaluating, but it's definitely on the roadmap. Kind of like after like starting Q4, we'll be able to sort of like move more aggressively on what we're going to do there. Yeah.
Okay, great. Another thing that's come up a lot recently is the idea of insurance on Notional and how that works, and if there will be any options in the near future for insurance sort of built into the protocol, or how will that work on V2 versus V1?
Yeah, I can take that one. So I guess what I would say first of all is that today you can go get insurance on Notional from Nexus Mutual. So we currently do have an insurance option for users. Now, what I would say for V2 and kind of more to point of, would we ever pursue kind of a tighter integration or something that would, make insurance kind of natively a part of the product, or like a more seamless experience for end users? I think that, so what I would say is that, we are in active conversations with some of the major sort of insurance providers in the DeFi space. And this is something that I think that there is a lot of value in, and it fits very well with our product. I mean, if you have a fixed rate, if you're lending at a fixed rate and you have insurance, that is literally a risk-free payout. And so I think that that's awesome. And that'll be great for users. And it'll also be just great for, I think that could be really helpful in sort of helping to onboard more mainstream capital, just being able to offer like something which is a truly risk-free opportunity, which is substantially higher yielding than what you get in traditional financial markets. So I think that, that's something we are absolutely pursuing. So it's something that we're thinking about. I mean, the issue that we have is that it's not entirely under our control, right? So we have to, work with other protocols, and, the amount of capacity that's there for insurance, may or may not be enough to satisfy the demand from our users. And so that's something that we need to sort of keep in mind. And again, it's not entirely in our control. But yeah, we are actively sort of pursuing opportunities like this. Yeah.
Okay, great. That's good to know. You mentioned briefly a little bit about just now about institutional investors and kind of getting them on board with DeFi. How do you see that process really going in the medium to long term, as far as getting mainstream institutional investors using a protocol like Notional? Because Notional is offering an instrument that is super familiar to the traditional finance world, which is fixed rate products. So do you have any comments on that, on where the timeline is, or how you see that process kind of looking?
Yeah, so I think that, something that's important to note here is that people can talk about mainstream or institutional capital, and it makes it sound like it's all the same. It's all just one big pool of capital, and they're all the same kind of person. And it's not really true, right? It's like, so I guess what I would say, I'd say a couple of things. So I think that, I have a lot of friends that are in traditional finance, and I talk to sort of people that are mainstream, if you will, and everybody's interested. So, especially in today when, the return on capital is so low in traditional finance, if you can show somebody a 10% fixed rate of return, I mean, they're definitely interested, right? Now, I think that getting them to actually pull the trigger is a process. So it's primarily, I would say, two things. So first of all, it's time. So, this is all still very new. DeFi is all still very new. And I think that, kind of the protocols where people have been a little bit more willing to experiment, so more mainstream people have been a little bit more willing to put their capital in, are protocols that have been around for a while, right? And have just worked. And that makes people feel comfortable, or at least comfortable enough, right? And so I think that, we are not going to get, mainstream, people that are very conservative putting their capital into Notional on day one, right? Like, ultimately, we can have these security audits and do formal verification, and we are absolutely doing that because that's like, we want to do everything we can to make it secure, but the ultimate test is time, right? And it's just over time, it working, right? And so I think that, a lot of the answer here is simply having it on mainnet and working, right? Now, the other thing that I would say is that, especially with a system like Notional, which is a little bit sophisticated, explanation is really important. So getting people, even if they can't write code or read code, getting them to a point where they feel like they have a rough understanding of what's going on, right? Like how the system works and what's happening with their money. Just like, so it feels like less of a black box. I think that is important. And again, that also takes time and takes time and effort from us, right? And so I would say that is also important. So I would just say that, it's a matter of time and consistent work to sort of educate people on how Notional works and showing people that it's safe. Yeah.
It's really interesting. I think that theme of time is really important and interesting. So at launch, I know we've announced that we'll have 1-year maturity pools open. What do you see the process looking like for opening up longer maturity dates, and how what's the thinking there with that? Because I mean, already 1 year in DeFi for many people, it seems like forever. 1 year in DeFi is like 10. So when you start talking about 5 and 10 year maturity dates, people's minds start to get blown a little bit, and they can't even like picture how that works or what they'll use it for. So I don't know if you want to talk a little bit about that.
Yeah, I mean, so I guess, so what I would say is, again, if you look at traditional finance, like I think the 10-year maturity is the most sort of liquid, the most popular maturity on the treasury curve, right? 10 years. And it's, there's just a lot of capital sort of in the traditional financial space that needs to invest for long periods of time. So there is absolutely a demand like in the traditional financial world. Now, but when it comes to us increasing the length of our maturities, I would say that, the first step here is we're launching with 1 year and we're going to see how that goes, right? And we're going to see, how much interest is there in the 1 year maturity versus the 6 month or the 3 month maturity, right? And if it's something where we see that, the vast majority of interest is in the 1 year, and because people just really, really want long dated loans, then we sort of get to a point where we feel more comfortable opening up the 2 year, right? And so I think that this is definitely going to be a progressive process. And, we want to be in close conversation with users. We want people telling us that they want longer maturities, so that we can feel confident that these longer dated maturities are going to get uptick and people are actually going to use them. So I would say it's a progressive process, and we want to be in close contact with our user base.
Yeah, just to add something there. So like, I guess one of the reasons why we don't like open up all these maturities like at launch is that, when the liquidity providers add liquidity, it's going to be split between all those different dates. So, we want to make sure that liquidity is concentrated in the kind of maturities that people are actually interested in and will use. And that's just going to make sure that, we're not wasting any liquidity and the LPs are going to get good return on capital. So, yeah.
And we've got this question a few times. What assets are going to be available to use as collateral on Notional for V2? And will Notional ever, think about onboarding other types of collateral, such as NFTs or anything sort of alternative like that?
So we're going to launch with DAI USDC, USDT, so Tether. Although Tether will not be eligible as collateral, but we're also going to launch with wrapped Bitcoin and Ether. So it's going to be the same currency set that we have on Notional V1 plus USDT. That's going to be the initial currency set. But, we have taken a lot of care to design Notional V2 in a way that we will be able to onboard lots of different collateral types. and we very much intend to. And we're sort of in the process of performing the base level analysis that is going to guide our decision making as to what collateral types are going to be safe to onboard. So we're currently engaged in that process, and we anticipate more collateral types, Notional V2, not too long after launch. Yeah. Now as for the NFT question, yeah, I'm not sure about that. It sounds really cool, but I think we'll have to like figure out how that would actually work. I mean, I think it's like a really, that's a really interesting question, and like I am interested in it. I think it's interesting, but like primarily our concern here is like making sure that the system is safe. So we're not going to put a collateral type on Notional that we aren't confident will be reliably liquidated if it needs to be. So that's going to be our primary concern when we think about this stuff. Now, if we find ourselves in a position where where that concern is addressed somehow, we'll look at it. But right now, no immediate plans.
All right. I think that makes a lot of sense. I think maybe we've gone through basically everything from the community, but maybe if you want to just take a moment and either of you sort of talk briefly about what the sort of long-term vision is for Notional, and kind of where you see it heading generally, and where Notional finds its place in the general DeFi ecosystem in the next couple of years.
Yeah, so I think kind of to touch on some of the points that I made earlier about sort of the integration of nTokens within the broader DeFi ecosystem, as well as sort of I think really the longer term thing here is fCash, and it's having Notional be sort of critical base layer infrastructure that enables people to define cash flows at specific points in time and make sure that they're liquid, right, and allow them to move cash in the future to cash today, right? And just supporting all the things that ability creates. So that's ultimately where I see, personally, where I think Notional is going to go. And because I could see sort of, I was a derivatives trader, and it's interesting, like when you're trading derivatives, everything is in cash flows, right? So the way you price everything is what is the cash flow at the future date and time? What is the present value of that cash flow, right? Now, I think that Notional could be foundational in the sense that it enables you to have derivatives where the cash flows are denominated in fCash, right? And so you could build an entire derivative system on top of Notional, which is, I think, would be really, really cool and really, really hard and challenging, because it'd just be like, if you thought Notional was complicated, like, I mean, that's going to be like extraordinarily complicated. But I think it will happen. Yeah. So, and yeah.
Yeah, I think to Teddy's point, just kind of like in the past, I would say week or so, just being able to actually like think a little bit past like the launch. And thinking about like what Notional might look like in a couple of years. I think to me, it's sort of like looking at Ethereum. The transaction fees are quite high. I'm sure people know and realize. And so what it really does is it pushes up sort of the average transaction size like quite high. And, as ETH goes up in price, that transaction size is just going to keep going up. So I do think the thing I'm most excited about is really like enabling this like fCash and like Notional, the Notional like product set to start to move into layer 2 and sort of open up access to these kind of like financial instruments to people who don't have like the capital to pay sort of Ethereum mainnet fees. And so, I think as we get there, we're going to see a lot of like interesting sort of products that can be built in a layer 2 environment where the fees are really low or zero, that can give people like sort of more retail access to these like really like Teddy mentioned, like risk-free kind of investments, right? Like lending at a fixed rate is something that feels very normal to someone who's like not kind of native to DeFi and like doesn't really like want to deal with interest rate volatility and like price volatility and all that stuff. So that's something very exciting to me, just because I think it's just gonna kind of like open up the product to a new kind of class of user. Yeah.
Okay. Well, great. I think we should end it there. So I really appreciate everyone who joined us live and submitted questions. If you're watching this later on YouTube, please feel free to check us out. Notional.finance is the website. Our version 1 is live now. V2 will be live late September, early October, like we talked about. And just get in touch. We'll put the links for the Discord in the description. Join us there. We're always chatting with the community and answering questions there. And we just love to see you there and be part of the Notional community. All right. Thanks, guys.
Thanks, everyone, for watching.
Bye, guys.